Last year, the corporate tax rate was 21%. That was a flat corporate tax for tax returns for the 2020 year. Now, this year, the President Biden has considered a larger tax rate, and the increase could be several percentage points. I've heard as high as 28%. The additional taxes you have on state returns can range up to about 11%. So even at last year's rate, if you take a flat 21%, along with an 11% tax on the state return, you're talking 32%. And in Illinois, the state that I live in, it is a rather, I don't think it's 11%, but it's just under 11% for corporate taxes in Illinois. There's a couple factors on that tax rate. So the reason I mention these things, when you do have a corporation, you have to take them into consideration. And also, a lot of small business owners, they form corporations, and you do have to consider that once you pay your corporate tax, if you, as a shareholder in the company, if you want to take money out, you now must pay a dividend, monies for withdrawing it. So it's a double taxation. If you pay 21% plus the state percent, that's X amount of money, then you decide, well, I'm going to draw so much money out. Now you've got to pay it again, and it's called, the double taxation. This is the reason that this is a very big part of the reason that the Sub-S Corporation was created. A Sub-S status has been available for many, many years, and what that does is it gives a shareholder, let's say an owner of a corporation, a shareholder, it gives them the ability to pay themselves a salary, and the salary must be reasonable. But any profits that the company makes then goes directly to their personal tax return. That essentially eliminates the double taxation. Now there are other elements, reasons for being a Sub-S versus a corporation, and they get rather lengthy, but just to hit on some of the main points, these are some of the items to consider. Now, on the tax return itself, for a small business, actually either what we call a C Corp, that's a regular corporation, or a Sub-S, the owners, generally speaking, are required to pay a reasonable salary to themselves. And the reason for this is, on the Sub-S return in particular, if you pay yourself $10,000 and your company makes $100,000, if you on the $100,000 there would be no employment taxes, and employment taxes, payroll taxes, get pretty pricey. They've got Social Security and Medicare and unemployment tax. Employment taxes can get up to about 15%, or in that range, depending on what your salary is. But you do have to pay a reasonable salary to yourself. On the return itself, the Sub-S return and the C Corp return are actually very similar in many regards, except for that flow-through item on the sub S returns. If it's a small company, you're not even required to put a balance sheet on the to fill a section out for balance sheet on the tax return. I believe it's $225,000 in assets. If you have under that, then you don't even have to fill that section out. So that simplifies the preparation of the return, as well as your bookkeeping requirements. Let's see what else. So I'm just looking at a return to see what information of use I can give you. The instructions for these returns are quite lengthy. You know, it's a 20-30 page instruction book. You know, and that's in small print. So it is a rather complicated subject. But when preparing the returns, it does help if you can have them filled out properly. If items are missing on the returns, sometimes the IRS will waive the need for that information. But if they feel it's important enough, you could wind up getting a letter a year or two down the road, and they'll ask you to fill out that section on the return. So whenever filling these out, have them done right. There is a cost of goods sold section if you have any type of inventory that you sell. And one of the main items that I always go over with owners is how that cost of goods sold section works, and in particular the ending inventory figure, because that has an impact on your profit, and the profit has an impact on your tax bill. So, but there's many different items and considerations when doing these tax returns. How many shareholders there are they related, and other items as well. But just in general, here's just a little bit about how a corporate tax return operates.